Welcome to another S&P 500 Trade Watch analysis. Today is August 14, 2022. In this video, we'll analyze the ETF for the indexes, the SPY, the QQQ, the IWM, and few of the FAANG stocks, Apple, Tesla, and Netflix, for price level and scenarios to monitor for the coming week. Stay tuned. In case you have not watched my latest weekly S&P 500 analysis video where I ask if you believe the June's low is the bottom for this cycle. And this video has generated a lot of very interesting comment and perspective, and I greatly enjoy them. Keep them coming, and thanks to all those share their perspective and their viewpoints. Now on to this video. This coming week, we'll get some market-moving economic reports. On Tuesday, the housing start report and the industrial production. Then on Wednesday, we'll get the retail sales before the market open, then the latest FOMC minute from the last meeting at 2 p.m. Eastern Time or 11 a.m. Pacific Time. And these could generate extra volatility to the market. And finally, on Thursday, the weekly jobless claim report and the existing home sale. Now, before I begin, just a quick reminder, if you like the content in this video, be sure to click the thumbs up to give it a like. And this will help promote this video on YouTube. And if you have not subscribed to this channel, click the subscribe and the notification icon. And finally, if you have any question or comment, please post them in the comment section below. Now let's start looking at the daily chart of the SPY. Last week, it has moved above this 415, 417 resistance zone and up to this zone here near the 428 level. The next potential resistance zone to watch is up here at this 435 level, and it is also in confluence with next week's expected move, upper range between 435.30 and 434.20. The resistance zone turned support zone near this 417 will be the nearest potential support zone, which is just above the CPI gap and beneath the expected move, lower range between 420 and 417.50. And notice also I have put in the this descending trend line, which is crossed the level somewhere around 430 mark. So keep an eye on this trend line for potential resistance in the coming week. On this intraday chart, let's first look at some of those verging point of control, the VPOCs for possible targets. Now there's only a point of control from Friday near the 427, inside between the weekly expected move. We also see a VPOCs just above the 435 zone, and this VPOCs is near 438. And also there are a couple of VPOCs below this potential support zone, and they are near the 413 and 410, and also inside of this high volume zone between 416 and 409. Since the low of July 14, the SPY has gained more than 15%, and that's been up 4 consecutive weeks. So with that backdrop, it is not unreasonable to see some pullback to consolidate some of the recent gain. So my downside scenario is I will look for the price to pull back to this lower range of the expected move between 420 and 417.5, and then test for support below this range and possibly come down and fill this CPI gap and also tag those VPOCs inside of this high volume zone. And notice there is a composite volume point of control here at 411.38. So keep an eye on that level for downside target. And now for the potential upside scenario. And if the market react positively to some of those economic reports coming out next week and decide to push higher, then the first thing that I look for is for it to come up and try to break this high volume zone and get above 430. And that means it to break this resistance zone at 428. Then look for a move to come up to this upper range near the 435 and 434 and into this resistance zone near 438. Now be sure to keep an eye on this trend line here, because that is in confluence with the zone up here, the expected range, the upper range of the expected move, and also this potential resistance zone. Now looking at the QQQ on this daily chart for the QQQ, we see the price is staying above this price zone here near the 318, and it appears to be moving toward this potential resistance zone near the 335. the upper range of the weekly expected move is right above this resistance zone, and the range is between 339.30 and 338.20. And the lower range of the weekly expected move is between 322.60 and 320. And it is just above the potential support zone, which is in confluence with the CPI gap here near the 318 level. Now, it also has gained more than 18% from this July 14 low to the present. Now, on this chart, we see there are a couple of epochs between the weekly expected move, and they are the Friday point of control near 330, and also there is this 323.75 and 320.70. So keep an eye on these epochs for potential target levels. Similar to the SPY, I wouldn't be surprised to see a pullback next week to consolidate some of the recent gain. So for the downside, I will be looking for a pullback to the lower range of the expected move, and then come down and test the price zone near this 318 level and tag those VPOCs I have pointed out earlier. And for the upside scenario, we could see the price push through this low volume zone here, and then up to the resistance zone near the 335, and then take out the upper range and then possibly chop around inside of this high volume zone between 347 and 338. IWM has been the best performer recently, and it gained almost 20% from the July 14 low to the present. The upper range for the weekly expected move is between 206 and 205, and the lower range of the expected move is between 195.75 and 194. Now, the nearest potential support is down here, somewhere near the 191.50, and the nearest potential resistance zone is up here near the 208. And on this intraday chart, we see a couple of the VPOCs near the lower range. They are near the 196.50 and 195.25. And also there is the Friday's point of control near 200. Notice the steep ascent from July 14 low to the present. And I will not be surprised to see IWM to take a breather and pull back a bit before the next upward move. So here's my downside scenario. Look for the price to dip below this high volume zone, and then tag the lower range of the expected move and possibly move down to this potential support zone near the 191.50. And if it continues to lift higher, then look for a break away from this high volume zone and move above this 201.60 and move into this upper range between 206 and 205, and then possibly come up and test this resistance zone near 208. Apple has been the bright spot for the market since the June low. It's been up over 33% since then, and more remarkably, it is only just a bit more than 6% from its all-time high here. We see the upper range of the weekly expected move to be between 176.60 to 166.20, and it is sitting right at the edge of the potential resistance zone. And the lower range between 167.90 and 166.20, and it is sitting right on top of this potential support zone. On this intraday chart for Apple, we see there are two VPOCs right above the lower range here of the expected move, and they are near the 168.75 and 167.9. And there is also a VPOC near 165, just inside of this potential support zone. And then there is this VPOC just below the upper range, and it is near the 175.30, and the Friday point of control is near the 172. For the coming week for Apple, I'm basically looking for a reversion to the mean type of a pullback. I'm looking for a pullback toward this support zone here near the 166.50, and that is in confluence with the lower range of the expected move and also this trend line. And it will also fill this CPI gap. And my upside scenario is a push into the price zone here, which is in confluence with the upper range near 176. Last week, Tesla was able to hold above this resistance near the 890 level. This zone will likely be the pivot for next week for Tesla. The upper range of the weekly expected move is between 975 and 950, and it is sitting just under this potential resistance zone near 971. And the lower range of the expected move is between 850 and 842. There is this potential support zone down here near the 790 level. And the price zone between this 890 and 874 is the pivot zone I will keep an eye on for clues which direction Tesla might move for the coming week. And for Tesla, there are quite a few VPOCs in between the weekly expected move, and they are 925, 906, 900, and 850. So keep an eye on these VPOCs for possible targets. Tesla did not put in a strong performance last week, so I see that it might just chop around within this high volume zone between 927 and 860, and then just tag those VPOCs that I just pointed out. Now, my downside scenario is for the price to move down below this high volume zone and come down and tag this lower range of the expected move, then bounces back inside of this high volume zone. And my upside scenario is for it to move up to this high volume zone upper edge, then reverse back down and come down back to the support resistance zone near the 890 level. Netflix has gained more than 51% since its June low, and it has moved into this huge earning gap that was made in April and sitting right at this potential resistance zone near the 248.70 level. We see the weekly expected move upper range is between 265 and 260.75, and the lower range is between 238 and 235. On this intraday chart, we see there is a VPOC near the 242.70, right below this 244 price zone, and the Friday POC is sitting near this 246. And there's also a VPOC near 227 and just above this high volume zone. So for the coming week, here is my upside scenario. Push above this price zone and then come up and tag this upper range near 260. And my downside scenario is to dip below this price zone and tag the VPOC near the 242 level, then dip down to the lower range of the expected move and then possibly move down to the high volume zone near this 227. Those are my level and scenario for the SPY, QQQ, IWM, Apple, Tesla, and Netflix for the coming week. Be sure to smash the thumbs up to help me promote this video. Thank you for watching and stay safe.